Turkey, a nation now synonymous with spiraling inflation. The country has been under inflation crisis, having profound impact on the daily lives of its citizens. Istanbul, a city known for its vibrant culture and bustling nightlife, now paints a different picture. Crowds gather on staircases, bringing drinks and snacks from home instead of enjoying the city's once thriving bar scene. The reason? They simply can't afford it anymore. It keeps getting worse. A waiter at one of these bars laments, highlighting the stark reality many Turks face. Salaries remain stagnant while prices skyrocket, leaving many struggling to make ends meet. Turkey has long battled an inflation problem, but last year, it reached a breaking point. Inflation soared to a staggering 85.5% in October, the highest in 24 years. Even as it moderated slightly, it hovered around unsustainable levels, with monthly figures that would cause panic in Western economies. June saw inflation close to 40% year-on-year, July nearly 50%, and August around 60%. Both investment banks and the government predict it will hit 65% by year-end. So how did Turkey end up here? The answer lies in the policies of Turkish President Recep Tayyip Erdogan. Erdogan's insistence on keeping interest rates low, contrary to conventional economic wisdom, aimed to stimulate economic growth but instead fueled inflation. His approach led to cheap credit and an overheated economy, a textbook recipe for runaway inflation. In a bid to stabilize the currency and woo voters before the general elections in May, Erdogan raised the minimum wage and tapped into central bank reserves to prop up the lira. However, these measures were short-lived. Post-elections, a dramatic shift occurred. The central bank, under new leadership, hiked interest rates significantly. From 8.5%, they jumped to 25% by late August. The goal? To curb inflation by tightening the money supply. Yet, despite these efforts, the Turkish lira remains weak, a far cry from its near parity with the US dollar in 2008, now worth less than 4 cents. Erdogan's appointments of Mehmet Şimşek as finance minister and Hafiz Gaye Erkan as central bank governor signaled this policy shift. However, as the government scrambles to regain control, everyday Turks are bearing the brunt. The impact of this crisis is pervasive. Many household incomes are insufficient against inflation. Impoverishment is now one of our biggest problems, explains economist Mustafa Sönmez. The inflation surge has led to a decrease in living standards, with more people prioritizing basic needs over leisure activities. Sociologist Urdagan of Istanbul University highlights the broader social impact. Thinner wallets mean people dine out less and avoid cultural activities. Food security becomes a primary concern, and stress levels soar, leading to increased depression, anxiety, and even domestic violence. The education sector isn't spared either, with students opting for evening classes or remote learning to work during the day, pushing them out of the academic life they once knew. Take the story of Hadisi, a 20-year-old sociology student. Financial struggles forced her to drop out for a semester, a stark illustration of how the economic crisis is disrupting lives and futures. Turkey's inflation crisis is a tale of misguided policies, economic mismanagement, and the human cost of financial instability. As the country grapples with these challenges, the resilience of its people stands out, navigating through uncertainty with hope and determination. What will the future hold for Turkey? Only time will tell, but for now, the journey towards economic stability continues.